The market moves lower, breaking more supports. But is it bearish? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were talking about this being the end of the week, the end of the month, and could the bulls show up to push it to new all-time highs, or would the bears be able to break down under support? And the bears broke down under support and followed through late in the day. Now the question is it really that bearish? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the market continuing to break support, the bears are still in control, so let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. The bears were able to push down through support, backtest it, and then accelerate to the downside at the close, down towards 52.40. We're looking for about 52.15, assuming they can continue to press. However, anywhere in this area is a valid wave 5 of C, as we have it labeled with an ABC down for this wave 4. It is a little lower than we would have liked to have seen this wave 4 come down to. However, it is still valid, and we do still give the bulls the benefit of the doubt, although there are many things pointing to the bears starting to take over this market. And when I say take over, I don't mean it's a bear market yet. I mean there are indicators that are now flashing bearish as of yesterday for the long term. There are many charts that are in topping patterns that I go over every day on my call. There's a lot of reasons to be very cautious in this area. But that doesn't mean the bulls can't make one more high to finish off this pattern. It would actually look a little bit better with this being a 4 and 5 to the upside to 5,400. That would give us a much cleaner pattern to the upside. That would make it look better. But looking better is just something that I like. I like a full pattern, and I like it to look correct, and that's more of an analytical brain that I have. That is not a requirement. The high can definitely be in. And really what we're looking for now is continuation from the bears. So far off the top, you do have a corrective pattern. This was 3 down. Okay, then you got a wave B up, and now you have a C wave down where we're finishing the 5th wave, it looks like, where you have 1, 2, 3, 4, and 5. So it would be normal to see a bounce from this area. You also have pretty good support over here. It would be normal to see a bounce from this area. The question is, how is that bounce going to look? And is it going to be a bullish bounce or a dead cat bounce where we start to come back down? And that's really the key as we move forward in the short term, is what does it look like if they can bounce? If they can't bounce and they start to do this, well, then it doesn't matter. It looks very bearish. If they can bounce, then the bounce is going to be either a drive back to 5,400, and that would be evident by first a strong move back through this 52.77 area, 74 area. Then they need to take out this high at 53.40, back over that, and we'd be on our way towards that 5,400 area to complete this wave 5. Anything up until that area, we can see this kind of move, and then that gives us much more of an indication that we may have a top in place. We still need to see some breakdown below 5,100. That would give me much more confidence that we are in a top that would at least take us down towards 4,800 and see what we get from there. There's a bigger picture path that can take us down to 4,800 and then back to new all-time highs, but that's putting the cart before the horse. We actually have to see that path play out and then make our decisions once we get to that place. So what we're looking for here is it's reasonable to see a bounce. They're in a very good support area here. If they lose this 5180 area, then it can be straight down to 5,100 pretty quickly. There's not a whole lot to hold of. This high here at the 5150 area would be reasonable support, and then that 5,100 area becomes pretty major support because it is a wave too low, and breaking that invalidates a whole bunch of upside patterns and makes it much more likely that a top is in place and we're heading much lower. So a direct move lower, directly selling back down, would be bearish and an indication that the top is in if they can break down below 5,200 strongly, or a bounce and then a come back down and break down below 5,200, and ultimately 5,100 would be what we're looking at to give us a confirmation that this top is in and we're headed to the 4,800 area would be our first target. And then from there, we'll see what we get. But overall, I'm looking much lower than that. Over on the NASDAQ. All right, so on the 1 hour NASDAQ, the NASDAQ, as I mentioned yesterday, has been much stronger than the ES in regards to its pullback. It just broke last week's low with the during the day yesterday, whereas ES had done that already. It's not through its support box here down at around that 18,400 area. But I did say if they broke that low, they should accelerate into that support box, which they are on their way to do. So we could see the bulls or the bears take this down to 18,400, but then we would like to look for a bounce at that point. And this is the fly in the ointment if you're a bear. The NASDAQ is not as weak and still has a bullish posture as of right now. So we could definitely see this as a 4-5 and a strong bounce. Taking it back over this high here at 18,976 would be that indication. Otherwise, you could see a bigger move down with an A, B, C, B, C kind of move where they break support. Now, a direct move down through this blue box would indicate that we likely have a top in place, at least a short-term top where we can come down toward the 16,500 area over the next few weeks and then see what we get from there. But overall, the NASDAQ is above its support. It has been stronger, and it is a little bit of a problem for the bears until they can actually break down below this blue box. So NASDAQ, same type of idea. We're looking for the bulls to try to push for one more high. A direct break lower would be much more bearish. And then also more bearish would be a bounce that can't get back over this high and then comes back down, creates a lower high, and then a lower low. That would be a much more bearish indication as well on the NASDAQ. Guys, if you like the information I put out in these videos and you want real-time, in-depth market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of the trading team, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material, our Elliott Wave for beginners, and our Elliott Wave advanced courses. In our advanced course, we go over the complex patterns that we see in this market. This one is a double 3. You can see it on the chart, how to label it so you can understand what these patterns look like, what fib levels they hit, how to find them, how to target them. We go through the fib levels, diagonals, double and triple threes, flats, triangles, all of the complex patterns that make these markets very difficult to manage. And it helps traders understand what's going on. You can see on the screen that traders are really loving it. It's helping them really figure out these complex patterns and have a trading plan to use so that they can be successful. But if this is too complex or you're just getting started with Elliott Wave, I completely understand. That's why we have our Elliott Wave for beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very confusing when good news makes the market go down and bad news makes the market go up. And this is because Elliott knew that the news cycles didn't matter long ago. He knew that key levels mattered, and he knew what happened when they held and when they broke. And this is a huge advantage over the rest of the trading market. Now, this course is 25 videos where I go over your introduction, where we go over your theory, your expectations, your emotion, your mindset, all the stuff that you need to know to get started, the chart setup and tools, where we go through every tool you need to use along with Elliott Wave, how to use it and why we use it, as well as the Elliott Wave for beginners online area, where I go through each of the waves, how they break down, what they look like, how to measure them, what their fib targets are, if they're failing, the theory of alternation, and the corrective depth theory, the pivot, everything you need to know to understand this market in a way that makes sense. The cool thing about both of these courses is if you want to get them both for a discount because you want to take the whole beginner to advanced course, you can get $30 off, $37 off by doing our bundle course here. Makes this about a $30 course. And if you don't want to pay anything at all for these courses, you want to get them for free, simply join one of our monthly rooms as they are included with your membership. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material you just saw and any training material we make in the future. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. If you're looking for individual stocks, futures trading, income trading, advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, his income trading method that's killing it, futures trading, and the reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures that trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. The bulls really need a bounce. If they are unable to bounce and the bears are able to collapse this below 5,200, then it starts to become more of a bearish look, and the bears take control of the market. We still want to see them break down under 5,100, but a break of 5,200 in a more direct manner is bearish. If the market bounces, how that bounce takes place will tell us about the short-term trend of the market. If they cannot exceed this B wave high and collapse down, that is a bearish look. However, if they can give us a move back over the highs, then we would look for one more top near the 5,400 area. Over on the NASDAQ, same story. We're looking for a bounce. A direct break below the blue support box at around the 18,400 area is more bearish. But if they can bounce, how they bounce will be important. If they can take it back over this high, we'd look for 19,100 to 19,150 for one more high before then turning down. However, if they cannot take it back over that high and break down below the blue box area, that would be a more bearish look in the market, and we'd be looking much lower at that time. Guys, it's the weekend. Grab yourself a drink, get out of the house, get away from your computers, have some fun with your family, and I will talk to you next week.